Hello, welcome to a brand new show, Rise with India. I am Priyanka Uppal.
And I am Ankita Saxena.
And for next half hour, we will take you through the different stories that are shaping India's rise to the top.
India is rising. We are the third largest economy in the world, which is poised to become a $10 trillion economy by 2030 and a developed nation by 2047.
But what is this show all about, Ankita? Why are we doing this show? Why are we so bullish on India's growth story?
Well, to get more perspective, let's go to the man who's the brainchild behind the show. Our editor-in-chief, Mr. Nikunj Dalmia, is here with us. So tell us, why Rise with India? What is the rationale behind the show?
You know, ET now for the longest time has championed Rise with India. India is rising. Are you rising with India? From fragile 5 to top 5. From where India was versus where it is versus where it would move. The whole setting on the table for Indian economy is such that for next couple of years, or I would say next decade now, it truly belongs to India. If 1980s was dominated by comeback in Japan, 1990s was the birth of Silicon Valley, 2000 to 2010, 2015 was all about China, well then next couple of years, the world would be saying that 2020 to next couple of decades, they belong to India. Why? We have young demographics, a young population. The average age of India is 25. We have all the wheels which are in motion, whether it is entrepreneurship wheel or perhaps the wheel in terms of talent and also innovation. More importantly, I guess India is the only large economy which has a promise of growing above 5%. It has a young population. Per capita is zooming. Entrepreneurship is increasing. And India now, in a sense, is becoming that large bloc which would be doing all the heavy lifting when it comes to the global growth.
All right, so then without further delay, let's take you through all the news that made headlines. April CPI inflation hits an 11-month low of 4.83%, declining marginally from 4.85% mark in March. The decline was aided by fall in crude oil prices.
India collects a record 2.1 lakh crore as goods and services tax in the month of April, a rise of 12.4% from the same period last year.
Delhi Bombay made it to the top 50 of the world's wealthiest cities in 2024 as per a ranking report by Henley and Partners. In last 10 years, both the cities saw a whopping 80% millionaire growth.
And SIP contribution crosses the 20,000 crore milestone for the first time in the month of April. Monthly SIP flows doubled in less than 2 years. The number of mutual fund SIP accounts stood highest ever at 8.7 crores in the month of April.
So let's get you more details on the SIP data, which has doubled in last 2 years. Sharad joins in with more details.
Well, yes, despite the market volatilities we saw in March and also to the run-up to the elections, we are seeing that the retail sentiment has been strong. And one such barometer to measure this is the monthly SIP flows. Now, if you look at the SIP numbers and the inflows, they are at a record high levels as per the recent data for the month of April. Now, the number is more than 20,000 crore rupees, to be precise 20,371 crore rupees of monthly inflows. Apart from this also, we dig deep into the internal numbers from the amfi data, and there is a reversal in trend, and only in the month of March there was an aberration. And now the flavor is back in the small cap funds as well as mid cap funds where the inflows have been strong. On the other hand, there is a trend reversal from March, and now the large cap fund inflows that also come down to almost 357 crore rupees. And if you look at March, it was more than 2,000 crore rupees. But there are certain segments where a lot of interest has come in when it comes to the inflows. And the largest inflow in the equity segment has been more than 5,000 crore rupees, and this is coming in for the sectoral funds. Also, Contra, Flexicap and Multicap are the flavors of the season where strong inflows have been coming in. And overall, if you look at the flows for the month of April, they have been impacted because of the inflows seen in the liquid funds. But for the retail segment, the equity inflow is coming in at 4-month low levels. And of course, there's a minor impact that what experts are stating is because of the KYC issues. Now that has also been sorted, as well as you don't need to link Aadhaar and PAN while you're doing the KYC numbers. Also, the equity segment saw the inflows for the 38th straight month, and you can see that's a strong record and that also shows a strong retail participation coming in the markets. And also lastly, the equity AUM as well as the total AUM, they are coming at the record high levels.
Nicole, we saw the numbers coming in on the SIP data. In fact, post-COVID only, we saw this massive surge, in equity participation. In fact, the average monthly SIP now stands at 20,000 crores, which means that the SIP flows have doubled in less than 2 years. Why is this happening, and is this likely to continue?
So Ankita, if you frankly ask me, the most heartening feature for Indian stock markets is that the rise of domestic institutional investors, which is aided by SIP flows. There was a time, and for the better part of 2000 to 2010, if FIs would sneeze, the markets would catch a flu. Now that is changing. Indian markets are no longer dependent on the foreign capital. If one really looks at the data, first hard facts here. 10 years ago, the average SIP money in India was about 3.5 to 4,000 crore. 3.5 to 4,000 crore in 10 years has become 20,000 crore. That also shows you the maturity in which the Indian economy is moving. The savers are no longer parking their money only into fixed deposit. Fixed deposit on a longer period of time does not give you that kind of a compounding return. So the magic of compounding, if you believe in it and if you invest in equity as an asset class, I guess that is something which always will help create wealth. You can smack a similarity. We saw the same culture in 1980s in US. You saw the same kind of a culture 15, 20 years ago in Korea. And now India, which is a large economy, the saving pool is actually moving back to equities. Why that is happening? Well, that's largely happening is because A, there is belief coming back in the capital market. B, there is also this growth promise which the Indian equity markets are giving. And Indian equity markets are very efficient and safe. Ankita, Priyanka, just think about it. India has one of the fastest stock settlement in the world. It is even faster than NYSE and NASDAQ. We have the best exchanges in the world where it's very transparent. Your money goes via the digital route. You pretty much know that, where your money is going, how your money is moving, and when your money is making a comeback. Also, the risk mechanism what SEBI and exchanges have put in. There is a huge amount of safeguard or a huge cushion which you have when it comes to the safety of your money. If you're doing a transaction, the exchanges will make sure that those transactions in a sense have a real substance to it. So a lot has changed in terms of the capital market, in terms of safety. A lot has changed in terms of the entire mindset of the retail investor who now believes in equity as an asset class. And a lot has changed in the way how entrepreneurs are now really regarding the importance of capital market and treating the shareholders or minority shareholders in a correct and efficient manner.
All right. So, Nicole, since these retail flows only, retail participation is only which is driving the DIs flows also. If we see the trend that FIs are continuously selling and DIs are continuously buying, so far the trend in May only, we've seen close to 25,000 crore FIs have sold and equivalent amount is being bought by DIs also. Is this a structural trend which is here to stay? And some point in time, maybe DI flows will be the only metric we would want to watch out for?
No, see, ideal situation is that the promise of India is so strong that you want FIs and DIs both.
Yeah.
What's happened of late is that, of course, you're right when you say that in the month of, in 2023, FIs were selling, DIs were buying. In the month of March, April and May, as of when we speak, the data is very evident that foreign institutional investors have been selling, but that market in a sense is not getting affected because of the DI buying. The ideal situation is that the India promise is so strong that you want FIs and DIs to buy. But when you see a culture of SIP, then you're not talking years. Then you're not talking days or months, you're talking years. And typically when this kind of an inflow comes back into the market, I guess this will be a trend which would be a multi-year trend. And we've seen instances, think about it. COVID, there was no panic. DI participation went up through the SIP route. Ukraine, DI participation went up through the SIP route. We've seen interest rates in US going higher, DI participation has gone up. You spoke about 20,000 crore in the month of April. Foreigners are scared, but Indians are not. Election volatility flows are going higher. So there is a maturity which is coming in the market, and that is largely to do with the kind of bent in the economy we are in. See, between 2000 to 2010, the market was dominated by foreign institutional investors. Large part of the free float in the market of A group stocks was owned by foreign investors.
Yeah, correct.
2010 to 2020, it was dominated by China investors. That's the time you saw birth of some of the most famous investors. 2020 onwards, the retail guys would actually be dominating the market. And there is evidence of that looking at the markets. Also, this entire retail, if I may use the word SIP culture, it has also dismissed one very basic thing which I learned very early part of my life, which is that when retail is active, it's time to really sell out of equities. You should never chase the crowd. So while SIP may be looking like a crowd, it is the retail money which is coming back. But I guess in this case, the crowd has demonstrated that the crowd also has understanding of what is right and what is wrong. This is not FNO money. This is not day trading. This is not Satta market. This is pure financial planning. When you're talking about SIPs, which will help you reach your goals. Right. It could be your financial goals, it could be your personal goals, it could be in holiday planning, it could be education for your kids. That's how you do a SIP. And that kind of a money always thinks in time in terms of horizon. Sure. 1 year, 2 year, 5 year, 10 year, 10 year plus. And that is the kind of money which is coming back. I was at a public forum a couple of days ago and someone walked up to us and said, I have started a SIP and I'm 75 years old. And I just genuinely looked at him and he said, Mr. Dalmia, I've started that SIP for my grandchildren, not for me. Yeah. So that is the spirit in which some of the conversation and narratives have actually started in the stock market.
So actually it should be called rise of retail investor, what we are talking about.
So in this whole rise with India, that is what we are celebrating. These are small touch points which you look at it. Yeah. These are small touch points which will actually have a large impact on you. So Eric Smith or Bill Gates, whoever you want to quote him, they brilliantly said that markets in life, we always tend to overestimate the rate of change in the short term, underestimate in the long term. Correct. I guess the SIP culture is just one of those changes which may look big in the short term, but it is something which could be a very large, it could have a very large impact in terms of how wealth and capital will get generated. Folks who are associated with stock market, they have to differentiate between income and wealth. Yeah. SIP is nothing else, but it is a way to create wealth, not income. And that is what my urge is, that when you're looking at SIP, I'm glad that Indians are focusing also on wealth creation rather than just income creation. Just one more point on SIP. I guess what is important here is that when markets get reasonably confident of money coming on a regular basis, then that also encourages corporates to plan IPOs. Sure. That also corporates encourages companies to raise capital, because what is the purpose of capital market? To give you capital. And when the capital is flowing on a consistent basis, it just equalizes the market and it takes the volatility actually away from the market. So constant flows by the SIP route through domestic institutional investors, I think from a capital market standpoint, is the single most important rise with India moment for us.
Here's more power to the spirit of the retail investors and wealth generation. But with that, thank you so much, Nikunj, for joining us. Viewers, it's time for us to slip into a short break. Don't go anywhere, because after the break, we are getting you an interaction with the Rise with the India champions. So stay tuned.
भारत को विश्व की तीसरी सबसे बड़ी आर्थिक शक्ति बनाएंगे, ये है मोदी की गारंटी।
Attention startups. Reach 25 crore people well within your budget. Advertise on 10 TV channels in one shot. No TVC required. Brand starter pack starting from just 1 lakh rupees. Brand Surge, the special marketing starter pack for startup brands. For more details, visit our website brandsurge.co.in or write to us at brandsurge@timesgroup.com. Times Network, now or nothing.
The batters all padded up, displaying magical footwork and balance, ready for any toe crusher. Wow, now that's a 5-star defense. It's the champion of champions, the feature-loaded Nexon, India's #1 SUV for 3 years in a row. Price starts at 7.99 lakhs.
किसानों को जारी रहेगी 6,000 रुपए की सम्मान निधि। यह है मोदी की गारंटी।
On this segment of Rise with India Champions, we are speaking to heroes that have contributed to India's growth story. And today, we are speaking to someone who has gone from changing lives to having an impact on the society.
From creating an institution which is built to last with passion and frugality, from understanding scale to using scales to bring the costs down, to increase affordability, this is the essence of Thyrocare's Dr. Velumani's story.
Landless farmer's son, who once struggled for 2 meals a day, went on to own the world's largest thyroid testing company called Thyrocare Technologies.
With the help of his wife, Sumati, Dr. Velumani began his journey of Thyrocare with an initial investment of 2 lakh rupees from his provident fund. Dr. Velumani and his wife set up the first Thyrocare lab in Baikala, Mumbai, with an initial focus on thyroid testing by considering the huge potential for this in India.
While the US is known for its garage startups like Apple and Google, here's a story of an Indian garage startup that has truly impacted lives.
Founded Thyrocare in 1996, first lab was established in Baikala, Mumbai, sold 66% stake in Thyrocare to PharmEasy in June 2021. He exited from Thyrocare at the peak of the valuation. Thyrocare Tech operating metrics under his leadership saw huge colors. FY21 net sales was 495 crores. Market cap that time was 7,657 crores. He maintained 40% EBITDA for a long 20 years. Over 1 million COVID tests were done as on March 31st, 21. More than 3,000 collection centers were established and over 110 million tests were done annually.
Well, even after selling his stake in Thyrocare, Dr. Velumani is not done yet. In his second innings, he's not taking it easy. He's wearing different hats and doing different stuff. And today, it's a pleasure to have him in the studio with us. Dr. Velumani, welcome to Rise with India studio. You're a true Rise with India hero, and it's a pleasure to start this show with having you as our first guest, sir. You know, you started out very early, a farmer's son, went on to become a scientist, started his own business, Thyrocare, a major business, good exit that you got there. Now you're on social media, you're making different types of content. As you said, you're the poster boy of versatility right now. What next? What is keeping this fire in your belly alive?
Thank you very much for having me in this program. And as you said, I have been changing myself constantly. I'm a thrill monger. Keep on looking at what next. And at every point of time, I have reset my button.
Yeah.
I think if I feel everything is going on smooth, I feel something is wrong. And that's how I have done a few decisions in my life, which has brought to me till now.
Yeah.
Now the question is, what next?
Right.
But then, जो हम सोचते हैं वो कभी होता नहीं है. जो हो ही जाता है वो कभी हम सोचा नहीं है.
Well
तो
said.
सोचना बंद कर दिया.
Right.
And I'm willing to accept, even at this age, something thrilling comes, I accept it. I'm not actively chasing something, but who knows, something I might be doing, maybe very different industry also.
Right. No, sir, you're absolutely a poster boy. You're a true inspiration from many. But then let's understand the space that you've championed in. Say, if we give you a time machine, from 90s when you started Thyrocare to 20s, where do you think the India's diagnostic industry is heading to? What about the preventive healthcare? What needs to be changed? What new needs to be implemented?
See, the industry has changed a lot in these last 25 years. What was preventive care, which was only 5% of the total laboratory revenue, today is 75% of the revenue is preventive care, because that is where money is.
Sure.
That is, people who are rich can spend frequently. People who are poor cannot even spend for necessity. So according to me, the preventive care has gone high in percentage. As long as the per capita incomes grow, the industry will grow. And if it doesn't, it will take time. According to me, the industry has got highly disrupted between 1990 and 2010. And a lot of investments have come in. The multiples all diagnostic companies have enjoyed was unrealistic. And you must be seeing a correction now.
Absolutely.
And there is a likelihood what was a market cap for these companies in 2021 might be again coming in only 2028.
2028.
Yes,
Okay.
it will take time. It's now 40% down.
But what a timing, sir. We must appreciate the kind of conviction you showed at the peak of the valuation. What thyrocare saw was in the year and the time that you sold it off.
And it was one of the best exits that we have seen, sir.
Yeah.
Yeah, I think I have been lucky always. I have been telling, fortunately I was poor, fortunately from village.
Fortunately, you were poor.
Fortunately, I left a government job.
Yes.
And fortunately, I went for an IPO.
Right.
And fortunately, I exited.
Right.
So if you look at it, all my decisions, today I can tell all fortunate because I have done good.
But sir, for someone to say, fortunately I was poor, that's a very positive outlook to have, because that's not, what somebody else would look at it right like that.
Poor has nothing to lose. He takes decisions fast.
All right.
And there are only two kinds of people in, number one, succeeded, the other did not take decision.
Well said.
So I used to take decision, fat se, because kya leke aaya, koke jaane ke liye. So I came with the 500 rupees to Mumbai.
Right.
And I had nothing to lose. I take quick decisions. In fact, all successful entrepreneurs take quick decisions, number one.
Right.
Number two, they don't discuss, they decide. Because in life, either you can discuss or decide, you can't do both.
Right.
If you start discussing, decisions will not come through.
Right.
So I was good enough to take decisions, didn't discuss with parents, didn't discuss with wife, didn't discuss with children, and I have taken good decisions.
Right, absolutely, sir. But sir, coming back to the diagnostic space, there is a lot of convenience right now, but there are too many options also for people. Where does one turn to for a good healthcare advice?
See, as far as diagnostic laboratories are concerned, earlier they were not accredited. No one was monitoring them. And people today want good brands. Good brands means good quality. Good quality means good accreditation. In the country, not less than 100 brands are there today, standardized. You can go for anything as long as there is a cost advantage, you can go for it. सस्ता रहेगा तो अच्छा नहीं रहेगा, ये पहली वाली concept था. मैंने उसको तोड़ा.
Correct.
Today, I think around 100 players are there. You can choose the one who is close by.
Right.
All right. Mr. Velumani, we also wanted to know, since we've seen that you've joined forces with the EA also to not just to fund startups, but also to mentor them. What is your advice? What can be the possible advice to our viewers who are watching, budding entrepreneurs, aspiring startups?
See, I have been often telling business is not a 100-meter dash. It's a marathon race. You have to have patience. Number one. Number two, I always tell, शादी करने बच्चे. Okay, let me put it this way.
Yeah.
To become a mother, you have to have an age. Even to become an entrepreneur, you have to have an age.
Fantastic.
According to me, 30 plus is the right age. Fortunately, I did not start business before 37. So that's number one is it needs an age.
Okay.
Funds never come cheap. Don't go for it too early, even if it is freely available.
Okay.
Build businesses frugally. It is your business. Keep the stock all with you. Don't unnecessarily dilute it to hit the third page of newspaper.
Sure. That's a good one.
The next one is employees are everything. HR is everything.
Yeah.
Identify gems, train them, and make sure that you nurture them and retain them. Very often entrepreneurs ask me a question, "Sab aadmi nahi milta hai, kya karna hai?" Agar if you don't get people in India, will you get it in Germany? It's the largest country, right?
Sure, right.
And then people tell, look, we don't get experienced. Why don't you give experience?
Yes.
The third one is, जो भी आता है वो भाग जाता है. If you don't take care of them, they will run away.
Sure.
So identify them, train them, take care of them. Employee team is the most powerful one, which will make you strong. The punchline is, to succeed in business, you need three things. A good dream, a strong team, and lot of steam.
Sure.
Dream, team, steam. If it in place, you are the leader.
Wow, very well put forward, Mr. Velumani. Ankita, did you notice that this time, in fact, internet and even the social media internet, you're talking about the social media, the new age media, is very excited about the reels what sir is making.
Absolutely. And different variety of topics that you're talking about. So it's not just the startup founders that he needs to give an advice to, but also the content creators now, because you've entered their business also, sir. Sir, tell us what is driving you there? How did you get the idea firstly? And what's driving that content? And where are you getting these content ideas from?
See, I've been basically a good storyteller. That is why my wife said I married you. Because a good storyteller.
So what was the story you told her that time?
A lot of stories. I think you get onto internet, you will see how I talked to her for 1 hour before marriage.
But were those stories true?
Pardon?
Were the stories true that you told her?
None of the stories which I have told were imaginary.
Achha.
Let me put it this way, my stories were never concocted, all were marinated.
All just well marinated.
So I think I've been a good storyteller for the last 25 years. I did not know I'm a storyteller. It was, in fact, the first time I was there 9 years back in ISA Insights. I talked on the stage. 200 CXOs stood and gave me a standing ovation. That is the day I felt I have stuff to talk on stage.
Right.
And mind you, I might have done in these last 8 years roughly around 500 events. On a stage when I talk, if there is a standing ovation, then why not reels? That's how I got into reels. I got into reels only in February month. Within 3 months, I could get the youth, the third generation. You know, they sometimes in the comments they tell me, grandfather is making sense. So I am very happy that a role of father or grandfather I am in. I think why I am liked when I am on stage or when I am on reel, I talk truth as truth, spade as spade, no coloring.
Right.
So I think that is liked. People don't hear it often.
Right.
And I am on it. And I am from a village, and I could reach to the top of the pyramid.
Sure.
And I was an employee, and I exited as an employer. I think I've seen almost 360 degrees of
both
life.
sides of the table.
So when I talk, people realize, yes, what he tells is kadwa hai. It's bitter, but it's truth.
Sure.
So I think I am liked for that.
Right. So, sir, you've done it all. So now from an entrepreneur to doing reels, and you're also a startup investor. In your second innings, what is the impact that you want to make?
I wish to run a business without profit.
Okay.
I think I must tell you, 5 years before IPO, one day my daughter asked me a question, Daddy, are you rich? Yes, I am very rich. What are you going to do with the money? I was shocked. A daughter should not ask, but then she's asking. It put me in a kind of thought. And then I told her, yeah, like Bill Gates, I will also give it to the society.
Right.
Then my daughter asked me a question, are you not an idiot? They all loot from the society and give it to patients. You are looting from the patient and planning to give it to society. Oh, that's a very powerful, and my daughter was only 22 years old then.
Sure.
Then I have decided to reduce the rate.
Okay.
And I reduced the rate. The volumes went up. The profits went up. So if I am making one more avatar,
Yes.
the CSR, the best CSR on this earth is doing business without profit. And I'm intending to do that.
All right, that is really inspiring, sir. In fact, thank you so much for being on the show with us.
Thank
you
you.
are our
I enjoyed.
first RWI champion personality. We are very honored and pleased to have you in our show.
It was my pleasure, and I have always been enjoying whenever I come to ET now.
Thank you
so much, sir. Thank you.
So this is the spirit of the show, celebrating Rise with India with the Indian champions. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.